doing business in Africa. You can't afford to be without Africa Investor.
Good afternoon, everyone. All protocols observed. Before we begin, I want to take this opportunity to introduce the NDC partnership to those of you who don't know it, and how it relates to this session and the broader African NDC Investment Summit and Awards. The NDC partnership is a country-led international coalition of more than 200 members, including more than 120 governments and more than 80 international institutions that are working together to drive ambitious NDCs to achieve the goals of the Paris Agreement and the Sustainable Development Goals. Leverage, coordination, and collaboration is what we need to finance and implement the NDCs at the scale and speed that is needed for the Paris Agreement goals to be met. Africa will need, as we've heard already, and this is the number of the day, 3 trillion between 2020 and 2030 to implement those NDCs that are on the table. That is around 277 billion a year, with around 90% of that expected to come from non-government sources. However, in 2020, climate finance flows in Africa only amounted to around 30 billion, which is less than around 10% of what is needed at this point. Climate finance might not be seen like a mystery. No, we all know in broad strokes that where money needs to come from, where it's needed, and who needs to be involved. But the reality is that there's a huge gap between the identified actions by countries through, for example, what's included in their NDCs and where the money is. And this is why finance is the most requested area of support for the NDC partnership. 96% of our countries have requested some kind of support around mobilization of finance. Finance will need to come increasingly from institutions like the ones that we have today in the room, like the ones that are presenting today. More role for the private sector is critical. But we need a private sector that is ready to make innovative investments in solving climate change, a private sector that finds ways to deal with the risks that climate-compatible investments in developing countries bring, and a private sector that collaborates with others in developing blending mechanisms to unlock deals and scale. And I think we're going to hear a lot of good examples today, and that's very exciting. The NDCs, especially those that have been updated and are now higher in quality and more ambitious, are powerful policy documents for translating country climate commitments into investment action and create appropriate policy signals for a transition to a low-carbon and resilient economy. Countries have raised the bar during the last NDC revision cycle, and their expectation is that equally ambitious support and finance will be available moving forward. From the side of the NDC partnership, through our members, we're working with countries on NDC investment planning and project development plans We're mainstreaming climate action within development plans and budgets, developing strong enabling environments to bring in the private sector, for example, and effectively engaging private sector financiers. We will hear about examples of the kind of projects that have been developed, in some cases with support from the NDC partnership, as they are recognized later today. And I'm very impressed always by the countries that are leading this work, and to the incredible innovative new initiatives that are being designed to support countries in this journey. And I have the honor to be part of the launch of some of these initiatives here today. So let me get to this session. This session is the NDC and Climate Investment Initiative Showcase. Our panelists will showcase how private capital can be mobilized at scale for the implementation of Africa's nationally determined contributions and energy investment projects. We will hear from Dr. Sharon Fitzgerald, partner at DLL Piper. First, okay, yes. We will hear from Hans-Jürgen Walter from Deloitte. We'll hear from Hendrik Malan from Frost and Sullivan Africa, and from Thijs Simonsen from Descartes. These initiatives were called for and announced at COP26 in Glasgow to de-risk and accelerate private capital mobilization for Africa's NDCs and climate investment opportunities. And I will be introducing each of our speakers. They will have 10 minutes. But before we move to them, we have the great honor of having with us Madame Dimalola Ogumbii, the CEO and Special Representative of the Secretary General for Sustainable Energy for All and co-chair of UN Energy. Thank you, Dimalola, for joining us today and for opening this very special session.
So, Your Excellencies, distinguished guests, I'm glad to be participating in this event. Special thanks to the African Union Development Agency, to the Continental Business Network, Africa Investor Group, the NDC Partnership, and the Africa Green Infrastructure Investment Bank for hosting this event and also inviting me here to speak. I want to congratulate the awardees for the excellent showcase of innovative projects and strategies that will go a long way in enabling a just and equitable energy transition by mobilizing much needed capital that would accelerate implementation. For a few days now, since I've been here, because I've been having meetings since Saturday, I've been telling people that the African energy transition is different. The African energy transition is about development and opportunity, and that's very, very important to understand. African, especially African youth, are starting from such a low base to having energy that the fact that we can thrive and we can be here today is really, truly remarkable. So when you talk about the African energy transition, development, climate, and energy have to go hand in hand. And you can't choose one or the other because we have to thrive as a continent as well. First, it also highlights, especially with this type of collaboration, the importance of real collaboration between institutional investors as universal owners, investee companies as customers, and multilateral development banks, regional banks, and development finance institutions as private capital credit enhancers. That is where we have to move on to, and we have to make sure the innovation is there. This type of event really plays that transformational role that we really need in mobilizing capital. It's all well and good, we've been talking so long about the 100 billion, but how do African countries, how are they able to mobilize the well-needed capital they need for energy development, for NDCs, and actually moving forward? Note, I have been picking on energy because I am the sustainable energy for all, but I really believe that energy is at the heart of everything we do. You cannot live a dignified life as a human being without access to sufficient energy. The timely, the way this event has been put together and this timely effort as African countries are embarking on their own energy transition agendas, these efforts actually merge, and we really need to mobilize the private sector investment that we need. And we need the private sector to tell African countries what they want. I know you have different forums where you say policy, regulation, perfect, but that scenario doesn't happen. Everywhere around the world, including Africa, projects drive policy, especially to scale. And I wanted to give my personal example. 15 years ago in Nigeria, I was told solar energy doesn't work. Sorry, it just doesn't work. And I found someone who believed in me and allowed me to power 200 schools and hospitals in my country. And now we're easily doing in Nigeria about 120,000 connections to clean energy every single month. So it's just to show you that if we hadn't done that, what seemed like a small pilot of 200 projects, we would never have got the mini grid regulation, the solar regulation. And again, it's not that the regulations are perfect, but at least they have to be tested. So we really have to look at this when we're talking about scalability, because it's only scalability that can bring profits and can bring real private sector interest. So again, thank you so much. It's important that we really, really do work together to strive for a just and equitable energy transition. Thank you.
Speaker, let me introduce Dr. Sharon Fitzgerald. She's a partner at DLA Piper, who will formally launch the Institutional Investor Public Partnership Model Law. So Welcome, Sharon, and please, the floor is yours.
Thank you very much. Your Excellencies, ladies and gentlemen, Hubert, thank you very much for being here today, and it is a great pleasure to be talking about the model law, which, as mentioned, we'll be launching today. So we've heard a lot about collaboration, and in terms of the objectives of the model law, embedded within that model law is the ability of government and institutional investors to work together collaboratively to be developing climate-facing investments and in programs and large projects. The law facilitates investment at speed and at scale. Again, what we've been hearing a lot of today. In the law, there are a number of new fast-track procurement processes, and I'll talk briefly about them in a moment. And there's also some ability in the model law to be helping facilitate the successful management of contracts. Quite often we can get to a position where the contract is procured, but it doesn't actually successfully deliver. So there are mechanisms within the law to assist with that. So in terms of the law itself, I know you'll all be rushing to download your copy of it, but it's a light read of about 140 pages. It's structured into a couple of introductory sections and then 12 chapters of the model law itself. So in terms of some of those introductory sections, what needs to be acknowledged, of course, is that if an institutional investor is going into a new jurisdiction to invest in climate projects, there will be the need for that investor to be carrying out due diligence on the country. So in the model law, we can't go into absolutely every law that may need to be implemented or amended. But what we do in one of the sections is we talk about the sorts of things that investors will be interested in when coming to a new country. So that could range from rule of law, dispute resolution, how fraud and corruption is dealt with, how sanctions are dealt with. So there's a wide range of different topics. But it gives an idea of what countries need to be thinking about in terms of preparing their country for institutional investors to come in. Another key element is to realize NDCs. Sometimes what will be needed will be additional sector regulatory reform. So it may not be possible to immediately launch a suite of, say, green hydrogen projects, because the green hydrogen regulations aren't there. Same for water projects, same for renewable energy, EV projects, the whole range of projects. So what we've said in the model law in another introductory section is here are the sorts of things that need to be considered when looking at that implementation plan for the NDC. What do the sector regulations look like? And we give an example of renewable energy and the way in which legislation can be developed to underpin and support renewable energy projects. So then we go into the actual model law itself. So as you'll all know, model laws to some extent can be a bit of a compromise. They're written not knowing who's going to be implementing that model law. Could be a country that it has everything in the model law apart from a handful of things, or it could be a jurisdiction that doesn't have anything that's in the model law. So the way in which the law is structured, it's flexible. It could be a bolt-on in its entirety to an existing, say, procurement law, or there could be elements taken out of the model law. So in terms of the innovations in the model law, you will see, for example, that there's the proposal for there to be the Climate Procurement Authority. So not the PPP unit, not the procurement unit, but having people from those units within that authority. But it's basically an authority that is purely focused on climate projects and in building up the expertise in those projects. You'll see a definition of climate project, because what we're trying to do here by this law is not open the gates in terms of this law being available to all types of project. It's a fast-track procedure only for climate projects that are related to realising a country's NDCs. You'll see in the model law a wide range of incentives which government can grant to the private sector. So that ranges from everything from grants, tax incentives, customs, to sovereign guarantees. Not all of those things will be available in a jurisdiction, but we've written them all out in the model law that people can come in, pick and choose, but above all else, speak to investors about what would make investors want to come into their country and fund climate projects. There is in the model law the concept of early investor involvement. That concept may not be for every government and every investor, but the idea really being that for countries who are right at the beginning of realising their NDCs, they may not have much in the way of feasibility studies. There's an opportunity in the model law for the investors and government to work together under the terms of something called an IIP collaboration agreement. There's also other incentives for investors, for governments, in the sphere of permitting. You'll all be familiar with all of the debates in the US about fast-track permitting and whether it was going to be in President Biden's Act or not. But in the model law, we've included some provisions on fast-track permitting, a single organization that will deal with permitting, and it's really looking to reduce the permit period as far as possible while still preserving the important controls that those permits exist for. We'll also see in the model law the use of framework agreements. So where a government is needing support from whether it's consultants, surveyors, enabling works, these frameworks will actually assist with procuring these sorts of contracts at scale. They're also included is electronic procurement, electronic auctions. There's a big focus on having model contracts as well. So all techniques to be fast tracking, but also to be giving government and investors certainty of what the risk allocation looks like in a particular topic. So I could go on for a long time, but I won't because we're very limited. But what I would say is that next steps would be in, I think, for all of us in looking for some Pathfinder projects, because wouldn't it be great if we could come together this time next year and actually talk about some of the things that we've been able to achieve with the model law. What we want to do, what I want to do, is see that model law stress tested, adjusted, reflecting lessons learned and best practice being shared amongst governments and investors.
Next, I'm pleased to invite Mr. Hans-Jürgen Walter. He's the Global Sustainable Finance Leader at Deloitte, who will be here launching a call to action report for MDB shareholders to catalyze more climate finance for Africa's NDCs. Please.
Hello, first of all, to everyone. The good news is I will use my notes here because 80% of my notes are already said, yes? So I think I don't want to repeat it again, that there is a 3 trillion gap, yes, for financing, etc. So what I would like to share with you is some of my observations and experience, because as you can imagine, I talk every day to asset managers, to banks, to investors, and to project originators, etc., how we can close the gap in general. It's not an African issue, as you know, yes? We have a global issue on how do we close the investment gap in general. And I can tell you that if you just listened to the World Leaders Forum yesterday, and yesterday night I have been on a dinner with Michael Bloomberg and a couple of CEOs from international banks. It's not a question of that there is no capital which we can move into sustainable projects. There is a lot capital waiting for being invested. The question is, how do we unlock the capital? And this is what has been mentioned in the World Leaders Forum as well. And it seems to me a little bit that it's now becomes a financial services or banking issue. Yes, how do we close the gap? But I can tell you, it's not that much about how do we get the capital into the project. The question is, how do we get enough projects where we can invest in? Yes, we look, just some examples. If you look at the regulatory side of it, yes, so no investor will invest if there is a risk, and if there is intransparency, and if there is not, let me say, or if there is uncertainty in the market. So that's the key role of asset managers and, of course, private equity houses, etc., that they need to manage the risk. And there can be as much money as we want. If we are not able to demonstrate that this money will be invested with a limited risk on a compliant basis, we will have an issue. We can talk about processes, we can talk about how to improve framework conditions, etc. At the end, it's about how do we mobilize and attract investors. Yes, and of course, and now I come a little bit to our report which we made. Of course, we need to work across all banks on optimizing processes, setting targets, trying to accelerate. But again, acceleration is not about how do we accelerate the attraction of capital. It's much more about how do we accelerate to generate jointly investment opportunities in the market. Yes, and this is not a financial services topic itself. It's a joint effort. So we need to talk jointly with project originators, with regulators, with financial institutions. How can we close the gap? And anyway, just as a general comment on that, because it looks to me a little bit that all are looking at banks and asset managers now how to close the gap. And I can just tell you we need to look at everything, yes, and we need to look at the project and investment opportunities as well, and then we can close the gap, I'm pretty sure. Yes, and in particular when it comes to Africa, to all the people I talk across the globe, I can tell you all of them are super interested in investing into Africa. You mentioned it already. There is sun, there is wind, there are so many resources, critical raw material, everything we need in order to do the transition. So everybody is looking and interested on Africa. Question again is, how do I get a linkage between the investors and the opportunities in your countries? And this is, as I said already, the most important topic from my perspective. Yes, coming to our report, what we made in the report is we set out a vision or some recommendations to the multilateral development bank in order to be prepared and in order to do what they can do to be part of this entire mobilization of capital. And we do have 5 recommendations, which are, and now I need to look into my notes, yes, because I can't keep all of them in mind. So as I said already, of course, we need a certain setup in terms of, further develop and update the purpose and governing charter documents, just to be sure what is the purpose and what is our objective, yes. And then we need to set, or every bank needs to set a clear objective on how much do I want to achieve in terms of activating capital, because you always need a goal if you want to achieve something, and you need to measure the progress, etc. This is pretty important, and it should be a stretch target, yes. But again, we should do the mistake to set a goal and then we see how we achieve it without I don't know, working on the root causes, how how to get this done. Yes, and as I said already, it's much more on the investment opportunity side. So then it's of course about risk management and yes, implementing the foundation for disclosure, because as I said, in transparency, risk management, and uncertainty, these are the factors which are hated by investors, and they need information as much as possible. Of course, we will never get perfect data on taking the right decisions, yes, because we do not have the time to wait and to collect all the data, so we need to take decisions on uncertainty in a certain way, but there need to be a fundamental level of information available in order to take decisions, and investment decisions in particular. And last but not least, if we want to become faster in doing that, of course, every bank and the MDB as well need to set up processes which allows to be fast if there is an opportunity. Yes, not to be too, I come from Germany, you know, it takes months, yes, from a bureaucracy perspective in order to invest something, etc. So we need in general become much faster and much more pragmatic in doing that. And this is my last comment on becoming faster. If you look at the regulatory side, just in Europe, yes, because I think it's important that we connect the developed countries with the less developed countries in order to get the money from the developed countries to the emerging markets. If you look at the regulation, there are so strict criteria, what is green, what is compliant, what would be greenwashing, etc., that you exclude already, I don't know, 60% of the market because they do not comply to all the criteria. We need to become much more pragmatic if we want to accelerate our efforts, because if we stick to all the criteria which are in the regulatory policies, etc., we will be far too slow, as we know already. Yes, so it's in Europe, it's about to, from my perspective, update the taxonomy and to make it more pragmatic. And that's the same, of course, for the other regions in APEC, Africa, and in the US as well, because otherwise, as I said, we will not find the investors to invest. Yes, so, and I stop here. Not that much about the report, I know, much more about my observations and my experience on that. Thank you very much.
Thank you very much. And every COP, you start hearing a sentence, message, term start to repeat. And I have a strong feeling, because I've already heard it a lot, that this time around it's going to be closing the finance gap. And I think that's a big, important part of the work that we need to do, and it's great to hear this. Project development plus risk management equals closing the gap, and the role of the MDBs is fundamental in that exercise, so thank you for that. Let me move quickly to Mr. Hendrik Malan. He's the CEO of Frost & Sullivan in Africa, and he's going to be launching and showcasing a project pipeline tracker that is profiling hundreds of investment-ready opportunities for finance.
Brilliant, thank you. Good morning, everyone. All right, we're gonna switch gears a bit. I do understand the irony of bringing a little booklet along across Africa and then dishing it out at a environmental conference. But if you haven't received one of these, there are a few copies of it sort of down here. A few interesting stats around infrastructure investment, pipeline of opportunities. I'm going to use it to guide you through some of the stats that we've extracted from our infrastructure investment tracker. So I head up Africa for an organization called Frost & Sullivan. Frost & Sullivan is a strategy consulting and a market intelligence firm. So we essentially identify opportunities for our clients, and then we build innovative strategies in the region to take advantage of those opportunities. Now, as part of that process, we analyze infrastructure projects on behalf of our clients, especially our financial service institution clients. So we profile individual projects bottom up across the region, and we profile them across the stages of development. And that gives us obviously a very good and a granular understanding, not just of the magnitude of opportunity in Africa, but also of the direction of the opportunity and how these opportunities evolve and develop over time. Africa has obviously laid out its developmental aspirations, Africa 2063, the Sustainable Development Goals, quite clearly. But I think, as per all the previous speakers, the challenge that we've got is all of those developmental aspirations and objectives require a very significant amount of capital that needs to be invested. And the pace that we've seen over the past few years have been way too slow in order to be able to meet those objectives within the time frame that we've allocated to it. And also, very importantly, the infrastructure investment needs to be across what we would term the 5 fundamental industries, the foundational industries, in order to be able to affect the socio-economic development that would be required in order to get Africa to move forward. Energy is very important. I don't take away from that priority, but there are also other sectors like information and communication technology, water, healthcare. We're talking about mobility or logistics. Are the other 4 industries that are really important in order to get a country moving forward from a socio-economic perspective. We can't just have lopsided investment on one particular industry or 2 particular industries and then think that the country or the region overall is going to move forward from a developmental perspective. Now, when we speak to big capital, whether it be locally or regionally or internationally, they raise the typical 2 issues that we've heard previous speakers raise as well. It's pipeline of projects, not enough investable opportunities. Africa does not have the depth of projects to be able to absorb the right level of capital, or alternatively, the other group of challenges is really around the governance structures. Africa does not have the robustness of the governance structure in order to be able to absorb programmatic level capital. Now, if we can solve these 2 issues, we'll see a better flow of capital, and we'll also see a better pace of capital coming into the region. I'm not going to try to address the second. I think my esteemed colleagues have started addressing that, and I think we are going to address it from a digital perspective as well, for sort of some of the speakers following me. But I am going to address the pipeline of opportunity. I'm going to address the magnitude of opportunity that's already in play off the back of some of the research that we've done. And we've also decided to launch a report as part of this process with the partners that you'll see on the screen. As part of this week, you'll see a press release going out later this week that will detail some of the opportunities that are in the infrastructure pipeline, in the infrastructure tracker that we've been maintaining over the last few years. Now, as I mentioned to you, we analyze projects over 4 different phases. Announced projects or tentative projects. So these are projects that have been announced that are currently going through various stages of feasibility. So every single infrastructure project goes through multiple stages of feasibility analysis, and those would typically fall into our announced or tentative stage. We also analyze them obviously across committed. Committed in our definition would be projects that have finalized all their phases and stages of feasibility, and we would term them as shovel ready. So they are ready for financing. They are ready to essentially sort of start executing on these projects, and they fall within the committed range. Ongoing projects are projects that are currently on the go, currently being executed on, and then we also track cancelled projects. Projects that have been shelved for whatever reason, which is important because it also gives you an indication of the level of opportunity and also the direction of opportunity within the region. Now, if we take a look at the numbers, currently we're looking at about 123 projects that are active, that are ongoing in the region, to the value of about $44 billion. They're currently across Africa. That includes North Africa and Sub-Saharan Africa that we track. And these aren't the smaller projects. These aren't the rats and the mice. These are relatively large projects, an average of about $350 million a pop, if you can do the quick math in your head. Committed projects, a further 237 projects to the value of about $57 billion on the go. So, count those 2 together. Ongoing committed projects that are shovel ready, just over $100 billion that are on the go. Of projects, 300 or 350 or 60 odd projects that are currently either looking for funding or refunding. That are in the region at the moment. We do have an additional 257 billion projects that are in the pipeline that are announced, that are going through feasibility at the moment, also speaking to the pipeline of projects that will most likely come to fruition over the next 2 to 3 years. 18 billion of cancelled projects. These projects typically make up the large projects. There are quite a lot of these mega projects in the region that typically get ensnared in bureaucracy and a number of other different things. that tend to be shelved after quite a number of years. I think there are about just a handful of projects in the cancelled projects, but it is important to keep track of those as well. So at the moment, even despite the fact that we are still obviously driving, and we're in the initial stages of driving a lot of infrastructure investment, already a very strong and a very exciting pipeline of projects already in place. If we take a look at the industries, we take a look at unpacking the industry focus of these projects, very heavy slant towards construction, general construction and energy. Those two combined make up at about 84% of overall projects, which is very heavily slanted towards those two particular categories. We obviously need a much more balanced portfolio, as we said initially, across other industries, to be able to move forward from a socioeconomic perspective. Everything requires water. Everything from manufacturing to urbanization, even energy generation requires water infrastructure, and there's very little water infrastructure development going across the region. Connectivity, the solution to a lot of Africa's fundamental problems around education, around e-wealth, e-health, resides within our connectivity infrastructure that needs to be developed and connecting, especially our more rural areas. Lots of attention at the moment in the energy space. Obviously, we had Africa Energy Week 3 weeks ago down in Cape Town. Very interesting conversations, dynamic conversations around not just some of the. Am I competing with somebody else? Yes. No. Yes. So we've had some very dynamic conversations down in Cape Town 3 weeks ago. Upstream assets. But also renewables, in the energy space. Sort of 3 weeks ago, Africa cannot industrialize off renewables only. There needs to be a parallel development between transition fuel on the one side and between renewables, which moves us into the next section, taking a look at some of the energy and sustainability opportunities. The first report that we are going to release will have the full understanding of all the infrastructure projects across the region, but we'll have a particular focus unpacking energy and sustainability in a bit more detail for you as well. So hopefully that will you find the fancy bit, and then also we will release another report in 3 months' time, and then in 3 months' time after that, looking at other industries like mobility, logistics in particular, and then also industries like information and communication technology and healthcare. Right, so renewables, solar PV, transition fuel, bio, we also have a massive amount of opportunity that will open up on transmission and distribution side. So we always talk about generation, we always talk about different fuels and different feedstock that will feed into the energy side, but we never talk about transmission opportunities. An equal amount of investment typically goes into transmission. If you invest 300 million into generation, you typically have an equal amount of opportunity that opens up on the transmission and distribution side. Which means that our policy frameworks need to allow for that. Our vertical unbundling of our energy sectors typically don't keep pace of that. It doesn't necessarily allow for that, and hence our energy industries, if you take a look at across the region, don't necessarily have a lot of unbundling, vertical unbundling, and our private sector participation in transmission is virtually null and void across Africa. So a lot of opportunity to be unlocked within the energy space, not just in renewables, not just in generation, but also in the other parts of the sector. Quickly taking a look at other parts of the value chain, electric vehicles, really big opportunity within the battery space for Africa. Everybody talks about Africa wanting to manufacture batteries. I think it's a really bad idea, to be very honest. I think we need to focus on very specific parts of the value chain that we can evolve and develop. At the moment, we take raw extracts from Africa, we ship it off to China, it gets beneficiated, manufactured, and then shipped around the south coast of Africa back into Europe. What we should be focusing on are particular points within the value chain that we know that we can beneficiate better. If we move from mining to refining to precursor production, think manganese, nickel, cobalt, graphite, platinum, 2 steps forward, we can increase the value that we generate in Africa by 29 times based on what we're doing now. 29 times increased value generation compared to what we are doing now, which is increasing the value from the extractive industries right through to precursor production. That's not cells, that's not battery, that's not electric vehicles. All of that can be done somewhere else in the world. That's just moving 2 steps forward in the value chain in batch manufacturing. Now, the interesting stat for you, green hydrogen, you will be hearing a lot about it during the conference this week. It is the most promising energy storage technology that we have at the moment. If you talk to anybody in the energy space, Africa has the renewable energy potential to produce 5,000 megatons of green hydrogen. That's equal to the world's energy supply at this particular point in time. The world's energy supply, 5,000 megatons. Can you imagine what the monetary value of that would be if we would even take advantage of a fraction of that within Africa? You know, the opportunity that we have to take advantage of these opportunities are immense, but we need to put the policy frameworks in place. We need to put the relevant investment in place in order to take advantage of those opportunities. Lastly, and I'm finishing off, I know I'm slightly over my 8 minutes, startup ecosystems. If you've kept track of the startup ecosystems over the last 3 years, you'll see that the venture capital and the angel investment growth rates have been absolutely phenomenal over the last 3 years. So I look at 2019, it took us about 46 weeks to get to $1 billion worth of investment in startups and through venture cap and angel investors. That industry has not existed in Africa up until this point. In 2022, it took us 7 weeks. We set records in 2021 with regards to startup investments. We are breaking all of those records in 2022, and there's no stopping. The trend is still hockey sticking beyond belief. The reason why that is important are essentially the following. We are innovating in Africa for the first time in history. We are solving Africa's problems in Africa for Africa. We are leveraging the infrastructure in Africa in order to solve Africa's issues. It will drive more investments and more refined infrastructure as we start moving forward. If we can combine that with a proper level of investment in baseline infrastructure across the 5 pillar industries, it will lead to what we term as the beginning of the Africa Renaissance. With that, I'm done.
Thank you very much. That's an incredible amount of very valuable information. I personally would like to have a longer conversation with you about how countries can be supported in bringing all those projects to shovel ready, which I think is a first step, and then of course how to close the gap thereafter. So thanks a lot for that. Finally, but not lastly, Mr. Thijs Simonsen. He's the CEO at The Card, and he will showcase a digital carbon credit capital mobilization and project development platform. So thank you very much. The floor is yours.
Thank you very much. Thank you for the invitation, Hubert. It's an honor to be here. So, efficiency of capital markets. That's what we hear they are saying. We need that to work. And I'm a bit more practical, so I have some examples there. We are working in Descartes with technology. We are doing Web3 technology and banking services, basically. And that means we are creating open banking infrastructure, and we are also creating the instruments on top. We are partnered with Africa Investor in order to basically facilitate the funding within the African markets. We already have 3 projects there, one in Kenya, one in Mozambique, and one in Zambia. We also have partner projects in Denmark, actually. And I'll try to give some examples here. So we need to pick up the pace, basically. How can we pick up the pace? So if we look at mobilization, one of the first thing is, how do we mobilize money in the early phase of the project cycle, basically? And that's a problem. So we need to mobilize capital early. How do we do that? That's a problem. And the other one is as well, basically transparency, we can say, whatever we call it, transparency, liquidity of the project, so the investors trust the projects, and I'll get back to that. Then if we look at the deployment as well, that's our 2 main focuses. We have created a direct model also for governance, collaborating with the locals, basically the governments and the investors. And we call it like a circular economic model, where we try to actually collect them all in the same framework and instrument. So if I go down to, this is a bit annoying actually. So I'm trying to do my best. So if we go down to what we actually created, so first of all, we created a platform. And the open banking platform, what it can do that you can place your instruments there, it can be exchanged, it can be traded globally, openly for all. So that's the first thing. And that also means we can create collaborative frameworks there, common framework for the governance of the assets. For example, how do we account for Scope 3 carbon credits? Yeah, and sorry, I lost it. So I'll be back now. So what we did here, so we had a customer, like an investor, a big enterprise, they had problems. They want to have Scope 3 CO2 offsets, basically. And they came to us to ask, how can we do that? We don't like buying those CO2 certificates, basically. We would like to do it in a transparent manner. We don't want to be on the front page for greenwashing. We want to know how the offset production is conducted, how it actually is basically executed, and we want to be able to track it. It should be accountable, basically. So said, okay, so that's the first thing. They will also like to lower the risk, basically. So how can we lower the risk? So first thing is like, when you account for the carbon credit offset production, when and how do you do it? So you can account for the future. That's a dangerous approach. So we said, no, we are going to account on what actually has been produced. So we account the delta year over year after the production has taken place. And there where we're going to put it on, basically. That's where you can account for it. So that's one thing. Then the other thing is as well, what if the forest burned? This is an afforestation project. What if the forest burned, basically? What do we do then? Or what if the government decides to cut down the trees? Or something else. A lot of things can happen, right? And the same problems we have in Europe as well. How do we protect the forest, basically? So again, there they want to get in and be able to proxy ownership of the forest and get the right guarantees in place, basically. So we created that as well. So it ended up being an instrument, we call it NFT. It's just a unique contract representing an underlying, basically, piece of land with a forest. And that gets you basically the right to the offset production of that land over time. And that means then the customer of this CO2, they basically become the investor as well. They both invest the money, but they also take the output. So they're in from the beginning of the project. They take part of the risk because it's transparent. So they finance this project from the R&D phase, basically. And now when the project is going live, meaning the trees coming up off the ground, they can either keep the CO2 offset themselves or they can sell it directly on the marketplace. Simple and easy. So it's tradable and easy for them to use. They have the convenience of handling the risk because of the transparency. So they're happy. It sold out. It went pretty quick. So that's basically what we do. We create the technical foundation for making that happen, and then we create the financial instruments on top. So that's a concrete example. And more than the tradability issue and the standards of the Scope 3 offset emissions, that's very important. What can we account it, what can we not account in, and so forth. There as well, we try to create a uniform way of doing it. It's an open governance framework as well, so everybody can see how we do it and how it's actually been executed and reviewed by third parties. So that's basically also working. So that's a concrete example of how with open banking infrastructure we've been able to create like a closed economic product for a customer and also investor, where they're actually there to invest in Scope 3 emissions, and they didn't want to do it before. It means they become both an asset owner, but they're also entitled to the offset production. That offset production could also be something else. It could be the right to the butterfly offset tokens or whatever we call them. There could be a lot of other properties on that asset which can finance basically the gap for the project. So that's like concretely what we did. And then we build all the technology to make it work, basically. So I don't know if it makes, I hope it makes sense. So that's the concrete project. And it's pretty hard to showcase anything here. So we created a small page with a QR code so you can go in there and look how it actually works, how it looks like, and then you can contact us afterwards. Well, that's a concrete way to pick up the pace, basically, of mobilizing and deploying capital.
Doing business in Africa, you can't afford to be without Africa Investor.